We just heard from Rodgin Cohen, one of the veritable deans of the banking industry. And Raj speaks at our event every year, and he often talks about the state of regulation, but this time he really made some recommendations on changes he would like to see to banking regulation, particularly regarding the approval process for transactions. Now, importantly, he emphasized that well-conceived transactions can receive regulatory approval. He pointed to some big approvals that have recently come down the pike: CIT's acquisition of IMB, PacWest's acquisition of Square One, and of course, M&T's acquisition of Hudson City, which faced delays for almost 3 years. He noted that these deals got approved even though they had faced protest. But he really called for greater clarity in the regulatory approval process, particularly related to compliance. Raj talked about how there's so much more focus on compliance today when it comes to regulatory approval than there was in the years before crisis, when so much focus was on safety and soundness. Now, he admitted that this was for good reason, that banks had lapsed on their compliance processes. But he said that the standards that could flag an issue related to an acquisitions, related to compliance, were not that clear. So he wanted far greater clarity so banks can have success to win. We also heard earlier today from a regulatory panel that featured 3 former regulators and 1 current regulator at the Federal Reserve. And they had a sort of a different take, not so much on changes they would like to see, but they tried to arm banks with tools to get through the regulatory approval process. And the message was consistent: be proactive, be early, offer no surprises. Several of us after the panel at lunch discussed how it was like a marriage. You don't want to come home with a big purchase and scare your significant other. Everything needs to be well thought out, well timed, very deliberate in your approach. They also emphasized the importance for sellers to conduct reverse due diligence. Because if a buyer doesn't have the ability to close, you can face very, very costly delays. They noted that it was tough to do this occasionally because you can't look at exam reports. But one of the things they suggested was hiring third parties to come in to validate some of their compliance practices and their systems. And that validation should offer you enough armor to get through a regulatory approval process. You can even see how a regulator might have weighed in on the third-party report and avoid a potential landmine down the road.